Hello, everyone. So, we are back for another weekly recap. So, we are going to talk about some of the top news things that happened earlier this week. Now, before I do that, though, I think I should do a quick introduction since many of you are new to the channel. So, my name is Bella Jones, and I am a corporate finance professional with over 18 years of experience. So, I worked in corporate finance for a really, really long time. I worked as a financial analyst, a senior financial analyst for a cybersecurity firm. I've also been a finance manager at a telecommunications company. And most recently, I was a finance business partner for a startup based out of Boston. And so in my career, I specialize in FP&A, which is financial planning and analysis. And so that just essentially means I'm helping companies improve their profitability. That's a fancy way to say that. So creating revenue models, business models, creating forecasts, budgets, a lot of data analysis, and financial reporting. So that is my background. I have a bachelor's of science in finance. I have my master's as well. And that's pretty much me in a nutshell. I figured I should kind of give that bit of color since many of you may not even know that I've worked in finance for a really, really long time. So if you have any questions about that, feel free to drop them in the chat down below and maybe let me know if you knew that or not. Some of you did, some of you didn't. I'm sure there's going to be a mix of both. So, big news this week, Apple may be facing some tariffs that will be imposed by the US government. So, President Trump is on the rampage again, right? And so he is stating that he does not want Apple selling phones that are not created here in the US. That's just basically his bottom line. And so it's funny that he's targeting one company in particular and not an overall industry. But he did say that Samsung will also face similar tariffs. So he is warning them that he will impose a 25% tariff at a minimum. It could be much higher. And of course, that would just make iPhones, Androids just that more expensive than they already are. And truthfully, he doesn't really care. So, Tim Cook did visit the White House earlier this week, but they were very hush hush about what those talks were about. But that is what's currently on the table. So, the current administration is looking for companies like Apple and Samsung to build factories here where cell phones will be developed, created, and then sold here in the US versus doing so in India or China. Now, what did happen though, Apple stock did take a hit from that. And I'm going to share my screen in just a second. Let me just pull this up. Where are we? Okay, and let me get back to you guys. And I'm going to share my screen so you can see what I am looking at. Do I want to share my entire screen or just a window? Okay, so hope actually let me stop. Oh, where did that go? Let me stop sharing because I don't like how that looks. And we will try that again. I will just share an individual tab. So it makes it easier for me to see you guys and see what's going on here on the screen. Let's make sure it's working. It is. So we are in business. Oh, here we go. So here is Apple stock as of close of trading today. And basically, this is the stock price during the last 5 days. And essentially, once that announcement went out from the White House about the potential tariffs, the stock price basically dipped quite a bit, as you can see here. And then it did rebound just a little bit. And so I think we will see a lot more of that. The stock is trading at $195 per share, which is kind of on the lower end of the 52-week range. So that's kind of interesting. And Samsung is facing the same potential tariffs. Now, I don't know what talks have been had between the White House and Samsung, but as soon as we know more, I will, of course, keep you guys posted. But that was definitely an unexpected twist that I saw this week. And so if this tariff ends up being imposed, that just means these phones that are already expensive will just become that more expensive. Now, I think what may potentially happen is the new cell phones may just be in less demand, and people will gravitate to buying used or secondhand phones, or they just won't upgrade at all. And I think we are going to see more of that if that 25% tariff does into place, as the economy is already in this tough spot where inflation is high, unemployment is increasing. And so when it comes to buying a new cell phone, that becomes a luxury that people just can no longer afford, even if they're doing a monthly payment plan, right? If you have a phone that's $1,000 and you impose a 25% tariff, that's going to just increase the monthly payments, and then it just kind of snowballs over time. So hopefully they will come to some kind of agreement on that, and we won't see those tariffs go into place. The next thing that happened this week is there is a bill in Congress right now that is going to basically get rid of any subsidies related to energy credits, energy rebates, anything that's going to help save the environment, essentially. And so, what we saw happen this week is the stocks of many energy or solar companies did take a hit, and Sunrun is one of those companies. So, if we go here, why is this not? Why is it not showing anything? That is like the weirdest thing. Let me refresh my screen. Okay, here we go. That chart didn't look like it did earlier. So Sunrun, the stock was about $10, well, $11 per share, give or take. And when the bill made it one step further in the pipeline to being fully approved, the stock price took a deep hit. It at its low was about $5.90 per share. It did rebound just a little bit, but it definitely lost some value in a very short period of time. And we've seen other solar energy companies have similar results. Now, I don't know what this means for the overall industry, but this is going to be catastrophic if they do, in fact, lose any subsidies from the US government. And that bill is getting closer and closer to becoming a fully fledged bill that passes. So, if you are currently invested in the energy space, this is something you want to pay attention to, as it will impact your portfolio. Now, how long will this impact your portfolio? Only time will tell, but definitely something you should be absolutely paying attention to. Let me come back and check the chat. Okay, I don't see anyone in the chat just yet. So next up this week, Bitcoin. Bitcoin is at an all-time high this week. Let me see if I can let me stop sharing for a second and see if I can pull that up. So Bitcoin did reach $109,000 per coin. Let me come back here and start sharing again. I think if I come here, yeah. So, actually, it closed that at the highest was $112,000 per coin, and that was earlier this week. And so, this obviously is fantastic for anyone who is currently invested in the crypto market, whether you are invested in crypto, meaning in Bitcoin or not. Usually, when Bitcoin takes a run, most other coins will increase as well. And so, this is definitely going to be great for anyone who is invested in crypto. Now, what I will say though, when you do have times of financial economic uncertainty, this is when these alternative investments do well. Things like crypto and gold tend to be where investors gravitate to when the stock market is very volatile and tumultuous. And the reason for that is, well, let's take it in two separate steps. Yes. So with gold is that asset that tends to be a safe haven or a safe place for investors when there is uncertainty. And the reason for that is gold is a universal asset that always has value regardless of what's going on in the market. So, for example, when it comes to a stock a stock only has value as long as that company stays in business and is doing well. If that company goes belly up, the stock now has no value. Whereas gold, whatever's going on around it, whether it's the stock market, housing market, gold just has value. It has intrinsic value. So wherever you are in the world, gold has value. You can easily buy it, but more importantly, you can easily sell it in the event you need the cash, whether you are in your same city, your same country, you travel abroad. Gold is kind of that universal thing that everyone considers valuable. And so investors tend to put more money into gold when they don't know or don't trust what's going on in the stock market. So while Bitcoin is taking a run, so is gold. And I'll kind of show you guys that just in just a second. And so if you are someone who is investing in the stock market, this is one of those things or areas you need to consider diversifying into if you so want to diversify in that manner. So we had discussed, I want to say earlier this week, regarding how to diversify your portfolio. So you can diversify by investing in different asset classes, or within a asset class, you can buy different types of investments as well. And so this is what we would consider a different asset class. So you have crypto, you have gold and other commodities. And if you're not currently investing in those spaces, I'm not telling you that you have to, but if you want to diversify, these are areas you can consider putting your money into. Now, of course, you want to do your research before you make any investments. You should never invest in anything that you do not truly understand. And the other thing too, if you want to look at it as taking a piece of your portfolio and investing in things that might be risky to you, that's totally fine. But don't treat these investments like you're going to the casino. I know for many people during COVID, they were investing blindly into many crypto coins, and many people did make a lot of money. But what happened is when the market pulls back, pigs get slaughtered. And a lot of that is due to lack of knowledge and lack of research. So make sure you are understanding where you are putting your money before you do that. So that's my spiel for today's lesson. So with that, let's kind of segue into a similar topic, and that is Coinbase. So, well, before I do that, let's look at gold before I digress. Let's see. So gold is definitely taking a run here as well. If you look at the last, let's see, year, it has gone from about $2,300 for a single ounce. And right now it's at about $3,400 per ounce, give or take. So gold is definitely seeing a nice increase. Again, this goes back to the stock market being volatile, people increasing or running to gold. And so as we all know, as an increase in demands then translates to increase in prices. And so we are going to see this for quite some time until the market kind of settles down. So, and also silver, the place you can consider investing as well. So back to Coinbase. So Coinbase, they just made it to the S&P 500 this week, and that is a big deal. So Coinbase went public back in April of 2021, and since that time, they've had a rough road with crypto being very volatile, but they now have met the requirements to be listed on the S&P 500, and being the first crypto company to do that, that is definitely a huge accomplishment. And so I think that also is what's contributing to the increase in the crypto market, is Coinbase having this positive news. So the stock price did land at 263 per share. And if we see here, the stock did increase just a smidge once they were listed on the S&P 500. And again, I think this just kind of shows that there is more and more confidence in the crypto market. And now with this milestone being reached, it further will cement itself in that crypto is a serious investment. It's a serious asset, and more people will hopefully take it more seriously. I find that younger generations tend to gravitate to crypto, whereas older generations don't quite believe in it since they don't understand it, and many don't take the time to understand it either. So this is going to, I think, shake up the market a bit and hopefully get more believers when it comes to crypto. Um, Now, Coinbase is joining companies like Apple, Microsoft, Nvidia, Tesla, Google, who are also listed on the S&P 500. Now, in case you don't know what any of that means, so the S&P 500 is a stock market index here in the US, and it lists the top 500 publicly traded companies here in the US. So for Coinbase to reach this milestone again is a big deal. So if you are currently invested in Coinbase, you may see a nice uptick in your portfolio. Now, the only thing I would say is the stock, they don't pay a dividend. So in case you're looking for dividend paying stocks, this is not one of them, but it could be something you could consider investing in the future. So in other news, let me stop sharing briefly and check the chat. So tariffs are still an ongoing conversation, as we just mentioned with Apple and Samsung. But now the current administration is threatening all countries across the globe to come to the table to negotiate new terms and conditions regarding new trade deals during this 90-day pause. If these countries do not come to the table to negotiate, the administration will impose those higher tariff rates and potentially with no future negotiations. Not sure if that's really true or not, but they are calling for all countries to come to the negotiation table, and if not, essentially suffer the consequences. And so with this information, the European stock market did have a bit of a hit earlier this week as well. And I think we will see a lot more of this until these tariff conversations are settled. Now, truthfully, I don't know if we will see a fully baked trade deal with all countries this year. That seems to be a very heavy lift. And so I think until it might be another year or two before we finally see this put to bed. So I think we all will be on this ride, and we have to just, again, ride this out. So let's jump into earnings calls that happened earlier this week. Now, the big one that happened this week is Klarna. So Klarna, they are a buy now, pay later platform. And so they had their earnings call this week. I'm trying to get to the document. Oh, so here we go. Let me go ahead and share it. And it seems that they had mixed results, just to put it lightly. Oh wait, no, this is not right earnings call. One moment, please. That was Home Depot. We'll get to them in a second. Here we go. Make sure you guys can see. Okay, fantastic. Now, I don't want to make it too big. So this is the earnings, the press release from Klarna's earnings call that happened on May 17th. As I mentioned, Klarna is a buy now, pay later platform. They give customers, the merchants who offer Klarna to their customers are giving them an option to pay for things over time. And so Klarna has expanded into many industries to where people are setting up payment plans for pretty much anything you possibly could think of. They also have launched a new partnership with DoorDash. So if people are ordering food on DoorDash, they can set up a payment plan. But DoorDash also offers more than just food services. So you can shop with companies like Home Depot, Victoria's Secret, Dick's Sporting Goods. And so that partnership is a plan or a strategy to help them increase their customer base, but more importantly, to increase their revenue. So these were their results from their Q1 earnings call that happened this week. Revenue is up 15%. They officially have 100 million active customers on the platform. over 700,000 merchants are offering Klarna as a payment option to their customers. Now, while some of this is good news, let's go to their earnings, their statements to kind of talk about what people are most concerned about. And I want to go to the version that's color coded. Makes it easier to kind of show you guys what's going on. So this line right here, customer credit losses of 136. So this means Klarna had $136 million worth of payments that they just did not collect in Q1, where customers have officially defaulted on making their payments. And so what social media is running with is Klarna is filing for bankruptcy. I can't tell you how many videos I saw mentioning that. Now, are these results great? No. So as you can see here, if you look at their net, well, it's not a net income, it's a net loss. And their net loss has almost tripled since the Q1 of the previous year. The consumer credit losses have also increased versus Q1 of last year. So this is not definitely a great picture to paint during an earnings call. So what Klarna has to do now is find ways to improve their collection rate from their customers. And also they may have to write better loans up front as well. The problem is Klarna is serving a customer base that is known for having bad credit. They're known for not making payments. So this is the space that there are losses they have to expect, but they have to find ways to increase revenue. And one thing I did mention in the video that I posted on social media earlier this week is they will also have to find ways to reduce their expenses. So I would not be surprised if Klarna begins to announce layoffs later on this year. As we all know, when it comes to operating a business, your people cost are your most expensive line item in your P&L. And that may be what they may have to consider in order to increase from a net loss to a net profit. Now, they have not made those statements or those announcements. I'm just speaking from my own personal and professional experience. You tend to approach profitability in two ways. You need to increase revenue. You also need to reduce your expenses. And in the case of Klarna, their revenue is increasing. The problem is they're not collecting the cash to support their operations. And so that's what they need to improve on. But when you do look at their balance sheet, which is here, they do have a pretty nice cash balance. They've increased their cash balance year over year, which is nice to see. So I think they need to just figure out ways to increase that collections from customers and ideally see how that plays out. I know they're kind of in this hard spot where they're trying to scale the company in multiple ways, and you need revenue to do that. And so with the revenue and cash they're bringing in, they have to navigate investing in the business and also, managing everything else in between. So they're in a tough spot right now. And also the economy is bad. So that's the other thing that most companies are facing right now is that customers are having a hard time financially. Between inflation being high, making it really hard to afford just life, right? And then you have company layoffs, and there are more to come down the pipeline, and people are struggling financially. And truthfully, many are relying on apps like Klarna to just cover their expenses. They're financing groceries, right? They're financing just their essentials. And so they're hoping that they kind of just can move things along until their circumstances change. And that is why apps like Klarna, Affirm and Afterpay are doing well. It's extending credit to people who don't have access to traditional forms of credit. So I think for them, it's just the cost of doing business. It's the space that they're in. And later on top of that is a tough economy. So Klarna, like many other companies, have to ride this out, but also find creative ways to be competitive and to keep their doors open. So I don't think they're headed to bankruptcy like many people are surmising. Are they in a tough spot financially? Yes, but that's business and they have to figure out how to navigate out of that. So that's just my personal opinion and professional opinion. Next up, we have Target, and I think let me stop sharing that screen, and we're gonna pop over here to Target. So Target, they are having a really tough time right now. Target, they used to be um heavily coveted by most consumers, right? You want to be a Target girly or Target girly. Target was definitely highly regarded, but they have dropped the ball in so many instances. So one of the big issues their customer base did have is them dropping their DEI initiatives, and they did it expeditiously. As soon as the current administration came in and mentioned they're getting rid of DEI, Target followed right behind them. And they also began dropping many Black owned businesses from their inventory. And there was so much outlash on social media behind that. They loved how Target was supporting Black owned and women owned businesses, and for them to just do a total 180 in like a blink of an eye definitely turned off many of their consumers, and now they're feeling it financially. um, so as we can see here, this is from Google Finance, in case you were wondering. Now their revenue is down 3% versus last year, but most importantly, their net income is down 20%. That's tough. That is really, really tough. And so they've missed all of their guidelines from Q1 as well. They missed their earnings per share. They missed their revenue forecast. So there's a lot going on here with Target. And so let's look at their overall. Let us look at their overall stock performance as well. Let's come back here and let's look up Target. So Target is trading at $94 per share, give or take. And if you look at the last year, this is just ugly to look at. This is just really ugly. And you literally see the drop off, coming right into the new year, which is when we had the current administration. And it just went, I think, I forget what happened here in November of last year. I have to go back and research that. I don't recall. But as soon as the current administration came in, which was right around, January 19th or something like that, it just went from bad to worse, bad to worse. And it just looks ugly. So it went from about, what is this? $142 per share down to $94 per share. So it's down 35% in the last year, which is tough. So if we look at their financials, which is always very telling, let's look at it on a quarterly basis. Well, revenue looks like it's down, it's up a little, it's up a little. Revenue look like it's up, but not versus this time last year, I guess. But their net income is also down versus what it was, a year ago. So it's a tough ride for Target right now. And so I think they're going to have to do a serious like PR campaign to turn things around, because they've made so many customers really upset with their stance on DEI and many other things. And so it's going to be a rough road for Target, and they have to not only come out with a formal apology. I think they've kind of tried to do that. They have to start going back to what their customers want and do those initiatives that supported other, small businesses and women and other nationalities. And if they don't want to do that as a company, that's fine. But their customers are going to continue with the boycotts. And that's what's been happening. People have been boycotting Target. They've been finding alternative place to shop, and Target is definitely suffering for it. So let me know how you feel about this Target situation. I have mixed feelings about it personally, but from an investor standpoint, what I would say, since the stock has taken a bit of a hit, if you believe Target will rebound at some point, now could be a good time to buy the stock while it's kind of on sale. But also, as an investor, if you have certain morals that you stand behind, and if a company does not align with your morals, then obviously you wouldn't and shouldn't invest in them. So there's those that kind of double-sided coin that you have to navigate as an investor. You are here for financial gain, obviously, but there are things morally and ethically that if you stand behind, that might also impact how you navigate your investments, which is also totally fine as well. But again, just something I wanted to point out. So let's come back here, making sure I could look at the chat. So the last company I did want to talk about today is Home Depot. They too had their earnings call this week. Actually, let me share the press release so you guys can see. Okay. Let me go ahead and share that so you guys can see what I'm looking at as well. So this is the press release from Home Depot's Q1 earnings call. So they did have a great revenue increase of 9% versus Q1 of last year. And so I think for them too, they're also worried about tariffs and how that's going to impact their bottom line. And I think, but not that I think, so they are sticking to their full year guidance, which is sales of approximately 3% over the next year. They plan to open 13 stores. They plan to continue their operating margin at about 13%. And so they still are showing a positive outlook for 2025. But of course, the biggest caveat for them is going to be the tariffs and how that's going to impact their bottom line. And I think we're looking at that. All companies are looking at that. And so when they give these full year guidances, there's always like a side note or a cliff note there to say, these are our best guess results for the year, but this might happen and things might change. So just something that we all need to pay attention to. If we look at their overall stock price, though, that of course is what's most important. They've had a tumultuous year as well. The stock is trading at $363 per share. If we look at the 52-week range, this kind of puts it kind of in the middle, I guess you would say. But the stock price is down. Oh, actually, it's up 11% versus a year ago. So they definitely had some highs towards the end of last year, coming into this year. And like many other companies with the tariff conversation, they've seen a dip, but they've had a nice rebound as well. So I think Home Depot, like many companies, just have to ride this out and see how things play out over time. Let's see what else. I think that was really it for today. I'm not feeling too hot, so I think I might wrap this up a little early today. But if you are here watching live and have any questions, feel free to put them in the chat down below. I definitely enjoyed last week's conversation. We had a lot to say about so many things. I learned about some new companies myself, which was fantastic. Let's see. Okay, no, I don't see anything in the chat. All right, so I think that's going to be it for today's live, guys. Thank you so much for tuning in. We will be back here same time, same place. Now, did I put that post up? Let me double check. I'm not sure if I did. I was supposed to put a post. I was going to put a post up on my YouTube to get more feedback from you guys, and I don't think I did that. So let me write a note to myself so I don't forget. I'm going to put up a poll, maybe a text box. so I can hear from all of you regarding what other things you want to talk about during these weekly recaps, or even just the content that I post here on YouTube. I want to make sure I'm covering the topics that are most important to you that will help you in your investing and financial journey. So any feedback you can give me would be greatly appreciated. And I will put that poll up when I end this live. So have a great night, guys. Also enjoy your holiday weekend. If you are here in the US, we have a nice 3-day weekend coming up. Be safe, and I'll talk to all of you guys next week. Take care.